Hello, Chris Shea here with the Shea Group at Keller Williams Consultants, and this is July 9th, and would like to go over the Columbus, Ohio real estate market update through the end of June for 2025. So, as we've reported in the past, typically when we start getting into the 4th of July weekend, which we just have, there's a big push right up until that weekend, and then showings and things typically drop off after that for a little bit while families go on vacations and trips. Doesn't mean activity completely stops, but definitely slows down. So there'll be a little bit of a lull through part of July and August. And then we typically see another little late summer surge into the fall as people do get ready for school and other things get a little more settled down after summer breaks. But with that said, through the end of June, we were pretty hectic and active, somewhat. When you look at it years past, it might not seem that way. But just to look at the data here, this is the market summary from the MLS report that I pulled through June. And you can look at these charts and kind of see the blue lines, active listings, new listings, and then sold listings. And when you look at June of 2025 versus June of 2024, which is 1 year ago, we obviously have more listings on the market now, which is in line with what we've been talking about with the growing inventory. I find sometimes it's easier to look at this on trend graphics. So here it is in a bar graph. I pulled the data for sales is the light green, basically what's active on the market. Solds is dark green. Pendeds, we don't really pull from here. It's odd how they pull that, and then new listings. So what you see here on this trend, it goes back to April of 2024 through the end of June of this year. And it's no surprise to see this trend continuing up of listing inventory growth based on what we've seen over the last couple months. Now, what I always like to do is look at the year over year and look at June of 2025 versus June of 2024. And it's pretty significantly different, 3,600 versus closer to 5,000 homes on the market. But the number of sales is still up. The number of solds is still up since June of last year. You could see it visually in the graph, and then down below is the actual data of that. So here we have for sales, June of this year versus June of last year. And we're at 4,900. Last year we were at 3,500. So 37%. I think last month we were around 40%. So again, hang steady with about a 40% inventory growth year over year. And then I also like to look at that solds, and you could see versus a year ago, we are up 8% on the number of solds. So even though it looks like, yes, inventory is still building, we're still selling more homes than we did a year ago, which is good news to show that the market is not falling off a cliff. It's still very active. It's just becoming more balanced. When we go down and look at year to date here, for sales, 4,800 versus 3,700. Again, year to date, it's only up 27%. So I say only, that's a pretty significant jump, but if you remember earlier months, we were closer to 40 year to date. So seeing more coming on the market, but again, we're still seeing typically more solds, but now year to date, if you look at this, it's down 0.7%. So I call that pretty flat. We're about the same, about 100 less homes sold year to date versus last year out of 15,000. So pretty insignificant, pretty flat. And then new listings is still increasing. So again, this can be seen in the bar graph up here. The blue line's new listings, even though that's down from a month ago, the overall inventory is up. So that means more of the homes already on the market are sitting. That's what's pushing inventory up. And that's what we're seeing. Homes that aren't move-in ready, perfect condition, selling in that first weekend are sitting longer than they were in the past. And if we jump back to our market summary table here, days on market, though it's down from where it was in the winter and even last month, roughly 25 days average, when you look at year over year, June of this year, 26 days on market, June of 24, 23 days. By and large, up a few days, not huge. The absorption rate we're seeing grow, 2.2 months now versus 1.8. Again, the absorption rate is if everything on the market was for sale and went into contract, how many months inventory do we have? We have 2.2 months now versus a year ago, 1.83 months. For the last several years, that number's been very low, under 2. Normal balanced used to be 4 to 6 months of inventory. I think the new normal is going to be in the 2 to 3 range. Like I said, I don't feel like the market's falling off a cliff. It's just becoming more balanced. So when we go down here to this, kind of supports that average sale price, June of this year versus June of last year, we're still up 3.5% from 385,000 to 399. And year to date, we're up from 364 to 377, which is about the same 3.4% increase. So again, saying even though inventory is rising by 27%, prices are still up versus where they were a year ago. And sales, even though flat from a year ago, that just means we're getting more inventory onto the market, so consumers and buyers have more opportunity or options. So again, I've said this before, but I think it's super critical when we get in a market like this to not just compare. This is all of Columbus MLS, and we can't just say, okay, anywhere in Columbus is represented by this. That is, in this kind of market, that is not true. You have to get really hyper local with a zip code, a particular area, a particular school district. All of that changes all of this data. This is great overall search to see that Columbus is still very strong versus other cities. But then when you want to get into specifics, I use this Altos research, and it's available really any zip in the United States you can pull up. These are the ones that I get automatically, and then you can always type in your own to look up a certain zip code. But why this is so important when you look at Columbus as a whole, this is the Altos report, 58 strong sellers market, still above that 30 threshold that drops it into a buyer's market. All this supports what we've already said. Some of these numbers are going to show different on price of new listings, et cetera, and sale prices. But again, if you look at this median list price, it is staying kind of flat, which is what we're seeing, maybe a little bit of increase, but depending on the area. So now when you jump into one of the hottest markets right now, Worthington, pull that zip code up, 86. That's a very strong market. Basically, as inventory comes on, it gets eaten up. Prices, yes, okay. This is, again, real-time data. So they are flat over last month and even down some since earlier in the year, but it's still a super strong seller's market. Basically, like I said, inventory coming on is getting eaten up. Here's another, Clintonville area, 43214, and North Columbus is also very strong. You can see that price jump, and we are seeing that with some recent listings we've had there that go quick. Then you get into like an average area, which used to be super hot, Upper Arlington. This price point is high, but we're seeing it's still called a strong sellers market. But again, when these numbers used to be in the 80s, 90s, now we're in the 40s, I wouldn't call it as strong of a seller's market as it used to be. Again, when you get this hyper local, you're going to see a lot more fluctuations in these median list prices because it's just pulling numbers over that last month. So this is out of 47 homes. So they have such a big range in UA, maybe more of the higher end stuff was getting sold. But again, that's indicative of the area. So let's pull up one like this, that some of the slower growth areas, 43205, which is short north, and that area to the south, Columbus, is a slight seller's advantage. when you get into, let's pull up 43206. I'm sorry, 43205, which is like Old Town East and Southern Orchards area. It says slight seller's market, but this has been hovering right around the buyer's market. And we're seeing that. We're seeing stuff in Old Town East sit, stuff in Southern Orchards taking longer to sell. I personally think these are two great areas to invest in. Well, Old Town East is a great area to invest in, or buy in if you're looking to get a good value for the money, because of the recent drops it's kind of had on price points and the pressure on prices. And then you pull up something like downtown, which is 43215, and you'll see that's even down into the buyer's market at this point, and prices definitely reflect that. So again, these Altos reports can be used to get hyper local in certain areas, and our team is very good at doing that. And really, we sell and buy with our clients all over Columbus and know pretty much all the areas around Central Ohio, but we can help in any of those. And we do a lot of this research so that our clients are well informed on what, market values are on homes. On the sell side, it's not bad news just because there's extra inventory. We can help our sellers really get prepared to sell their house quick, because that's your best opportunity, is to price it right, sell it fast. And by price it right, I don't mean fire sale. I just mean be at market or slightly under, be competitive against others out there. And this kind of market, what we're seeing is it's not sticking a sign in the yard and selling it like it used to be. It's back to pre-COVID type market where sellers really have to get their home prepped and ready to sell and in top condition. Those are the ones we're seeing sell fast. Others that come on and think, oh, my neighbor's got this, I'll get that still need paint, that need a bunch of updates, or maybe need some repairs. It's not selling as quick because buyers want move-in ready. And when they are willing to buy ones that need work, they're asking for a lot of remedies. We're getting that. We're getting a lot of seller credits for buyer closing. So again, getting more balanced, not all bad. It's kind of good for both sides to have more of that balance, so we don't run these prices up beyond anybody's affordability. So I think it's healthy to the market. We've continued to stay busy. We can help our buyers and sellers and investors. Feel free to reach out anytime. Chris Shea at kw.com or the Shea Group, and our agents are here and ready to help. Have a great day.